What's up, YouTube? Welcome back to another video. Okay, so today's gonna be a really simple video. It's not gonna be anything crazy, right? So I had a question from my Discord that one of my members, one of my students asked me to go over inducement, right? Because the last video we talked about liquidity and I talked about like inducement a little bit. And like when the market induces, like, a buyer or seller, it's really simple. It's really the market trying to trick one side of the market to like get into the market, or really just trying to create liquidity. So before I get into this video, you can check the link in the description if you want to join the Discord. I have other links in there. I have a broker in there, and I have many other stuff in there. If you want a one-on-one session, you could schedule that with me. If you guys are interested, let me know. You can also contact me on Instagram, or you can contact me on Telegram, right? So inducement is really simple, right? It's exactly how it sounds, right? It's nothing really crazy, right? Like I said, you don't want to overcomplicate anything when you're looking at the market, right? You want to keep everything simple. You want to keep everything clean. You want to be as, simple as possible. And you just want to keep everything just, simple. Okay, so we're going to go over a basic example of how the market tries to induce a buyer or a seller. In this case, we're going to do how the market tries to induce a buyer, and you could kind of just reverse it in your head for sellers because it's the exact same thing, right? You could just inverse it. Okay, so let's say we have a demand zone, right? So let's say you have a point of interest right here. Okay, so let's say you have this demand zone right here, right? And then you have the market come down like this, and then we do something like this. Right? So technically, we didn't tap into this demand zone, right? This is inducement right here. What are the banks trying to do? They're telling people to buy the market right here, right? Because obviously you would think the market would come straight down. Usually the market does this when they're trying to manipulate and fill orders at the same time. So they're basically creating more liquidity. So that's basically what inducement is. It's creating liquidity. Okay, so instead of them just coming down here and tapping into the demand, right, they want to fill more orders. So they're going to create more liquidity. So they're going to induce people to buy here. When you see this, right, when someone sees this, they're going to try to buy right here. And this is one of the like best confirmations that you can see when you're trying to take a, supply area or a demand area, or just even a simple order block or a sponsor candle, right? If you see that the market creates some type of low or, equal lows above where you're trying to buy it, that is a good sign. Why? Because most likely you're going to see this. You're going to see the market come down, take these people out, go to the upside. This essentially is going to be the manipulation to tap inside this area, filling more orders for them. Okay? So this is a perfect example of inducement, right? The market is telling people to buy here. Why? So they can create liquidity and fill their orders. Okay? It's as simple as that. Right, and this is not the only way that it happens. It happens with regular highs and lows, right? You can see something like this as well. Instead of the double bottom, you can see something like this. Market could come down and then go back up, and then do something like this, right? This is inducement. Market is telling people to buy here. The market is, by making these lows and holding these lows, the market is telling people to buy, right? When somebody sees the market doing this, they're thinking, okay, now the market wants to go towards the upside, right? Maybe the market didn't want to tap in here, right? That's what some people think. And this is why I always, when I have a demand area, if the market does something like this, right? So let's say the market comes down like this, and then we do something like this, and then we start going to the upside. I am not going to trade this. Right, I'm not going to trade this unless the market comes inside of this area. I'm not going to trade this. Why? Because this could be inducement from the market, right? This could be the market telling me, this could be the market trying to trick me to buy all in right here so I could get manipulated like this, right? And I don't want that to happen. So I don't trade this lower time frame unless we're inside of the demand, because I know if we're inside of the demand, I have a higher probability of winning this trade than if I'm just trading above the demand and the market could still come down into the demand. Now, I'm not saying the market always comes into the demand, because sometimes you'll have a demand area and the market would do something like this, right? This is rare, right? Most of the time, market is going to trade inside a demand area. That's where they want to target, right? But sometimes you don't have the full demand area, because remember, there's higher time frame demand, and then you can also scale in to draw out these areas here. So sometimes you'll have like daily demand, but you only marked out the demand on the lower time frame. You understand what I'm saying? So you don't have the full area. So sometimes the market will do something like this. It'll come down. Maybe it'll accumulate here and then go to the upside. Until we break this high, I'm still interested in this demand, right? So now if we break this high and I see the market go higher, now this is going to be my next area. Now I don't care about this area anymore, right? That's not inducement for me, right? Until the market breaks this high, this is not going to be an inducement. It's not going to be a trick for me, right? I see this as a trick from the market until we break structure, right? Until the market breaks structure. Because if the market breaks structure, that is telling me that some type of buyers got inside of here, right? Some type of institutions got into here to push the market higher, okay? Because remember, at each high, right, there's some type of supply. There's someone selling up here, right? There's always someone selling. There's always someone buying. So that tells me that these buyers here were able to take out these sellers, which means that the buyers are still in the market. So where's the last evidence of buyers in the market? It's going to be here, not here anymore, right? So that's how you look at that. And it's going to be the same thing for, a sell inducement, right? To induce sellers. They're going to create equal highs, and then they're going to manipulate those equal highs to create liquidity and get their orders filled. Okay, so just don't be a part of a trick, right? Inducement is really just tricking people to get in the market early. So while we're on EU right now, right, we could try to, scan the market for inducement, right? So I can give you guys an example. This is the most obvious one right here, right? The market created equal highs, right? The market created these equal highs for a purpose, right? They wanted people to sell up here. They wanted people to get in the market early. Why? So they could go up, fill the orders, and get into the market, okay? That was the main reason for that. So even though the people that were selling here, the bias was correct, the banks wanted to get their orders filled. So they created this on purpose. This was inducement, right? This was telling people, oh, okay, now we want to sell, right? Because once you see a high, right, and then the market goes down, you see another high, and then you see another high. What is people thinking? This is a resistance. So they're going to sell here, right? Even if you were correct on these two right here, look what the market did. Come up to sell. That's exactly what the banks like to do. Now let's look at this down here. This is inducement, right? You have these lows right here maintaining. This low maintained, this low maintained, this low maintained. What this is like it's a trend now, right? This is like it's going to be a trend. So what do you think people are doing, right? They're buying. They're buying. This is inducing people to buy, right? They're creating this small trend to get people to buy on these lows here. And look what they do. They take them out, and then they move towards the upside. Even right here on this small little trend, right? They're maintaining highs. Look at how these highs are maintaining. You see how all these highs are maintaining? They're inducing people to sell. That's all they're doing. They're inducing people to sell so they can go up, right? As these people are selling, they're placing buys, right? So as people are selling the market as it's going down, they're placing buy orders to get their orders filled. This is inducement. This is really the true meaning of inducement. This is how they really just go about and get their orders filled. They're inducing buyers and sellers, right? Whether it to be to buy the market, to continue the market, to reverse the market, it doesn't matter, right? The inducement is just creating the liquidity for them. That's basically what it is. All right. So, I mean, it's really as simple as that. So here's a more obvious evidence of them inducing buyers, right? So you see how the market came down, made this low, went back up, made another low, right? But this low did not take out this low. So these are equal lows. So, I mean, obviously people think we're buying here. Okay, people are going to think, okay, now people are going to buy at this area because they think this is a level of support, right? Because you have this as well, right? You have this right here that they draw out sometimes like this. So you have support. So people are going to buy. They're going to buy at this area, especially look how the market, see, they know exactly what they're doing, right? So look how they came to the downside. Instead of just selling all the way down, look what they do before they cause this manipulation, right? They slow down. Okay, they slow the market down. You see, instead of them going straight down, they slow down. Why do they do this? Why do they do this consolidation? Because that's getting into people's head. That's making people think, okay, now we're going to buy again because the market is slowing down and we're creating this, we're creating this support right here, and there was already like a level of support. So they slow down for a purpose. They're tricking people. That's basically what they're doing. They're tricking people. They're inducing people to say, okay, now the market is slowed down, it's going to buy again, buy the market again, right? The market is going to buy again. Market is going to buy again. And then they do this. And then they do this. I mean, it's as simple as that, guys. I mean, we don't have to talk about nothing else. It's really that simple. They're just tricking people to buy early so they can get their orders filled, right? Or on the opposite side, tricking people to sell early so they can get the orders filled. They can manipulate, create liquidity, get the orders filled, and they can do what they want to do, right? So with inducement, you don't really have to add nothing new to it, right? Because smart money is basically about avoiding this right here, avoiding this manipulation. So if you already trading smart money, you're already trading Wyckoff, you're already avoiding this type of issue right here, right? You're already avoiding the inducement because we know where the market wants to react and where the market doesn't want to react from. So when we see this type of stuff and we see these equal lows, we're not going to be stupid enough to buy the market inside these areas, right? So, but it was a lesson for the people that don't trade smart money, or if you just wanted some more comprehension on it. So check the link in the description if you are interested in joining the mentorship Discord. If you are interested, join the community, let me know. If you want a one-on-one session, let me know. And we have many other links inside the description if you want to check it out. We do have a giveaway coming soon. I don't know what I'm going to do yet, but I will figure something out. And peace out, guys. I'll see you in the next video.